Hello, everybody. Welcome to the web member webinar here at CFIB on the economic outlook for Canada. I'm waiting for folks to still trickle in. I see our numbers are still going up, so just wanted to give another 10 seconds or so before we get going. As I'm waiting, I'm going to let you know my name is Corinne Pohlmann. I am the Executive Vice President in charge of advocacy. I've had the great pleasure of hosting many of these webinars. So if you're returning to our webinars, welcome back. If you're new, we're so happy to have you, and hopefully you'll get something out of this webinar. Louise has beaten me to it. Hello, Louise from Timmins, Ontario. So I am coming you normally from Ottawa. Today I'm actually in a small town in Southern Ontario, but I can see folks from all over the country joining us from Belleville and Winnipeg and Edmonton and Aylmer I saw earlier as well in Calgary. So love to see where folks are coming from right across the country. And so it's so good to have you join us. So it's always great. I will just remind you, if you have not been with us before, if you have a question, feel free to pose it in our Q&A. So the Q&A is on the bottom strip of the page. If you want to just have a comment or want to put something into the chat, that's fine, but we may not be able to get to the question as easily if it's in the chat because we tend to lose it. So we prefer you put it into the Q&A so we can keep track of them much better. And our folks behind the scenes, we have a couple of them today, can potentially answer your question directly back to you. Also in our chat, and we'll repost it again, is going to be a copy of this presentation. So you're more than welcome to download it as we go through it. So we'll have our team post that as well. I see Michelle seems to think that the volume is quite low. If others feel that way, please let us know. We can see if there's an issue there. But yes, the volume is very low. So I'm not sure. Let me test my mic here. All right, making sure that I am. Does that sound better? Is it still very low? Volume dropped. Okay, still low. Okay, well, what I'm going to do is maybe pass it along to Simone while I try to figure this out. But we will introduce you to, and I'll speak louder, to Simone Gaudreault. If we can move to the next slide, please.
Sure, Corinne, and I think
I'm good now, apparently. So thank you. Okay.
I think it got adjusted by our technical support. So
Excellent.
pleased to be here. I'm the Chief Economist and VP of Research at CFIB. And so I'm joining Corinne for this webinar today to hopefully walk you through some of the highlights of the current economic situation, what's ahead. And I think we actually have on the next slide a bit of a highlight. So if you want to, Corinne, I think you wanted to maybe speak to some that we have.
So a few things. Obviously, it's a fairly difficult and challenging time right now. A few things that we maybe are trying to be a little more balanced in is that we do finally have a federal government once again. We had basically been without one for the last 6 months, and they seem at this point to have a bit of a stronger focus on the economy, and they are bringing in some tax cuts. We are seeing some resilience in the economy, despite the fact that we've really been faced with lots of difficult situations at the moment. And you can see there are things that are to our advantage in Canada, such as assets, free trade agreements that can potentially help some of our business owner members through this difficult time. And of course, this idea of Canadian unity has certainly grown once again. And it's nice to see people really rallying behind the Canadian flag, focusing on Canadian products, shopping local. And I think that's been a great thing to come out of all this. Of course, we still have our American not so much friends as much as we once were, doing things that are creating a lot of uncertainty. The trade war is not over. We'll talk a bit about the tariffs, of course. The markets are still ups and downs. We do have policy challenges ahead of us. There is early signs of economic weakness, and Simone will certainly go through some of what that looks like in just a moment. And we continue to have some pretty long-standing issues, which we'll also touch on, things like low productivity, housing costs, and our public sector, costly, slow, and maybe more can be done in those areas. So those are things that we're going to touch on a little bit as we go through the next little bit of the presentation. If you go to the next slide, these are the various areas we're going to focus on. You'll see a bit of Simone, or a lot of Simone, a little bit of me as we go through this. And of course, we'll try to answer your questions as quickly and as many as we can. So with that, I turn it over to Simone at this point to start us off.
Thank you, Corinne. And so let's dive right into it. Like you're seeing here, the five main parts of this presentation. We'll start with the current economic outlook, and then policy developments, the latest small business data, and we'll finish with economic forecast right before a very short conclusion, and hopefully we'll be able to take questions along the way. So on the next slide, let's start with the current economic outlook, what it looks like if we look at some of the top economic indicators from StatScan. I put some together on the next slide for you. So this is a group of different indicators, and we've what we've done is we've looked at the trend until March of this year. So if we just advance it and go with the next data point, right? As of March of this year, here is how it looks like for a set of different economic indicators. They're all in base 100, so they are an index. Meaning that if you rebase all of these indicators on a base 100 as of January 2019, and you look at them now, or as of March of this year, it gives you an idea of by how much they've progressed. So, for example, the first bar that we have here, the first line that we have here on this chart, the green line at the top, is the value of imports in current dollars. The index is at 146, meaning it has progressed by 46% since January 2019. Exports 136, so 36% more in the value of our exports. Retail sales plus 32%, manufacturing sales plus 25%. And if you look at GDP, which in this case is not in current dollars, but in constant dollars from 2017, GDP has progressed by 11%. So GDP is the total value of our economy, and the number of active businesses in absolute terms, and this data point is fresh as of February of this year, has progressed by 4%. 4%, sorry, over the last 7 years or so. So doesn't look too bad, isn't it? But if we compare it actually to inflation, and that's where we can probably show inflation if you can. Yes, it's actually sobering news, because inflation, as measured by what you're probably seeing generally speaking in the media, consumer price index, but there's also industrial products price index. There's various ways of measuring inflation, and you're probably even somewhere in between as you look for inputs for your business. But bottom line is inflation during that period was between 22 and 33%. So if you subtract that from the first four indicators, the progression becomes much, much more modest over the past 7 years. For GDP and active businesses, it's a bit different because we've already, by design, the indicators strip out the effect of inflation. But if we compare them actually to population, and you can see here that it's pretty much equivalent, or even in the case of active businesses, we have grown by only 4% compared to a population that has grown by 11% over the same period, meaning that we have fewer businesses per capita in Canada than we had 7 years ago. If we go to the next slide, I wanted to share with you a few more indicators also on the overall economic situation. So apologies, the charts are a bit small, but I'll unpack them for you. On the left, you have the exchange rate. Right now, the exchange rate is about, like, the Canadian dollar is about 73 cents, 73 US cents. And we're back to a situation we were at the beginning of the fall of last year. And what you have on this chart, actually, the vertical line, the vertical dotted line that finishes with the black box, is when Trump posted his social media post about implementing tariffs at the end of November of last year. You can see from that chart that the dollar had already started on a downward slope a long time before that. And of course, after the trade war started, the LFD announcement, it kept going down, but it has strengthened recently, and we're now back up to where we were actually in the mid 2024 kind of range, which is not something that is overwhelmingly strong. Like as you can see from the chart, the exchange rate has been stronger for us in the past, but certainly we were not where we were at the end of last year, beginning of this year. With oil, which is the chart on your right, I've put here two lines. So you have the green line is the price for the West Texas Intermediate oil barrel, so basically the U.S. prices, if you will, and in blue, Western Canadian Select, so it's the price that we get for our oil here in Canada. As you can see on the lower line at about $50 a barrel, the price for the U.S. price is several dollars higher. This highlights our inability to ship to many different markets. We're a bit prisoner of the U.S. market for our oil, and so that's why we get a lower price, and that's also why we talk a lot about infrastructure projects these days. That's why the prime minister, and the premiers were in Saskatoon, in Saskatchewan, Regina, the past few days, and that's why this is such a big concern right now. If we can increase or narrow that gap between the two lines, increase the price we're getting for the Canadian oil, we can generate some economic activity. On the next slide, I wanted to look here a bit about at the labor market. So here are some select indicators that are up to date as of April of this year. So if we display just the April indicators here, please, can we just add, yeah, the index levels for the employment in Canada. Same idea as the chart two slides ago. So we have a progression of 11% of employment in Canada over the past 7 years or so. Numbers of hours worked in Canada has progressed by 9%. And the big story here, as you can see on this chart, is the green line. It's the job vacancies that as of March were 7% higher than 7 years ago. But after going on a real, as you can see from the line, a real roller coaster, really. We've hit a record number of job vacancies in the overall economy somewhere in 2022, and now and it has been going down significantly since, at least for the overall economy, which would include not just small, medium-sized businesses, but also large employers, both in the private and the public sector. We'll see later in the webinar that the data that you share with us regarding your job vacancies in your business are a bit different. But let's go back to this chart and let's look at a comparison point. This time we have the GDP. If we could just show GDP that has grown, remember, by 11% real GDP, meaning our employment has grown in line with economic growth, but the numbers of hours worked is slightly lower. And if we look at the population, also, that's again an 11% growth. So again, if you compare to some benchmarks, you see like the real growth in the economy just not happening, unfortunately, at the moment. On the next slide, I wanted to take a moment here to talk about consumers and the market for your goods and services, and how are Canadian consumers feeling. This is data from a very recent public opinion poll from Léger that they've done a few weeks ago. They've asked they've polled Canadians, and they've asked them in the past few weeks, have you increased your purchases of local Canadian products? 74% said yes. So good news here. And if I had shared with you a line chart of that indicator over time, because Léger, that's a tracking poll. They've been asking this question regularly since the start of this year. You would see that this share has remained fairly constant over time. So this buy Canadian, buy local movement remaining strong in Canada. And as you can see from the table below the chart, it is true whether you look at the different regions of the country, gender, consumers by gender, or even by age group. So a bit of good news here on the consumer side, but on the next slide, you'll see that it's a bit of a mix, because at the same time, you have in the economy a sizable share of consumers that are maybe a bit less confident. And so this question asked Canadians how they would describe their own households' finances today. Again, that's from only a few weeks ago. Two-thirds said they were in a good shape, but only a small portion of that group said finances were in a very good shape. Most of them said they are in a good shape, and close to one-third, so about 3 in 10, said their household's finances are in a poor shape right now. So this is showing that consumers, a certain group of consumers here, still show some bruises from the past challenging years that we've had, and also probably a lot to do with some of the uncertainty that we're seeing in the economy, the labor market not being so strong, and job opportunities maybe not as plentiful as they could be. So all that could be explanations why consumers are not in the best shape, at least a sizable minority of them. On the next slide, if we go to policy development, that's where maybe Corinne, you wanted to cover some of the important elements that we have to add to this this mix, and that we have to take a look at.
Yes, thank you, Simone. So I wanted to chat a little bit about what it is that's happening in the context of the economy that we're living in right now, that are also adding to maybe some of the challenges that you're facing, but maybe there are a bit of hope here and there as well. So if we move to the next slide, first, of course, dominating everything are the tariffs. It has been a pretty challenging few months, starting back already in November, December. We saw the signs that this was going to be an issue. And of course, we've been experiencing the ups and downs ever since. This is a bit of a list of all the things that have happened so far, but what is important to note is what are the highlighted areas. These are what the current state of tariffs are in Canada right now. So we do have US tariffs, so tariffs of goods going into the United States on aluminum and steel at 25%. And on and also on the auto sector, certain autos and auto parts as well. And anything that is not CUSMA, Canada, US, Mexico agreement compliant, also has a 25% tariff on it right now. However, if your goods going into the US are compliant with the Canada, US, Mexico agreement, there are no tariffs at the moment. Coming into Canada, so if you're an importer, Canada has imposed tariffs worth initially up to about 60 billion. Wide variety of initiatives all over the place. There was some lessening of those tariffs about 2-3 weeks ago. I think it was a bit erroneously reported that most of the tariffs had gone. In fact, that's not true. Many of the tariffs still exist, but tariffs related to certain types of emergency services. So if you're in a hospital or firefighting equipment or things that are used for emergency purposes, those were lifted. Also, any tariffs around packaging for food products were also lifted so those were the two big areas where some tariffs were lifted coming into Canada. But most of the others are still in place for, I think some of you and many of you that have come to us have reported are still affecting you in many ways. There is a list on the government website of what those tariffs are continuing to be. Again, there was a bit of, we thought, a reprieve a few days ago where the federal courts in the United States knocked down the legitimacy of these 25% tariffs, but within the same day, they were back on as they go through the process of trying to fight out what is legal and not legal. So as of today, these are the things that are still in place. And of course, just I think yesterday, the President Trump also talked about increasing aluminum and steel tariffs to 50%. So again, this hasn't come into effect. It's supposed to come into effect, I guess, tomorrow. We'll see if that is still the case. I think there's a bit of speculation that it may not, but this is the world we live in right now, unfortunately, and the uncertainty continues to prevail. Moving to the next slide is really what is our government doing? So we do now have a minority government headed by the Liberal leader, Mark Carney. He has set up a new cabinet, some new faces, some old faces are in there. He did provide one mandate letter to all of the cabinet officials, basically of the 7 priorities he's putting forward for this government. Essentially, they are these here, the building a relationship with the United States, but also strengthening trade relationships with other trading partners, removing barriers to interprovincial trade, and we're going to talk about that in a second a little bit more, and expediting major infrastructure projects. In fact, over the weekend, there was a meeting between the Prime Minister and all the premiers to discuss exactly these 2 things, and to try to sort of come to a more of an alignment on what those major infrastructure projects may be and how they're going to eliminate the trade barriers that still exist. Bringing down costs for Canadians, making housing more affordable, keeping Canadians safe, so law enforcement, armed forces, defense, that kind of thing. Looking at talent and labor and bringing immigration back to more sustainable levels. And interestingly enough, spending less on government operations, which I think is something that is probably welcome news to many folks as we try to grapple with the new reality that we have in front of us. So those are the priorities of this government as they have put out right now. If we move to the next slide, these are the things we're pushing on your behalf. So these are the things we've heard from you are some of the more difficult, challenging things that we're trying to get some clarity on. Some of them are what we would call unfinished business. Some of them are issues that we think are important moving forward. This isn't an exhaustive list, but they are the ones I want to share today. Of course, on tariffs, the government of Canada is collecting money. Thing is, we don't know how much, and we don't know what they're doing with it right now. We believe, and it should be normally, that money gets returned to the businesses that are affected. We have not really seen if that's happening or where it's happening. The only sector so far that they've committed to is the auto sector. But we would like to see that more broadly based because we know many of our members are hurting on the tariff front. And so we are pushing them to quickly return that money in some form and make it easy to access. Secondly, the carbon tax. The carbon tax will be eliminated. They have introduced legislation to that effect now. But we still need to see the return of the remaining 600 million. That is what was collected during the 24-25 tax year before the carbon tax was eliminated. That still needs to be returned to small businesses as soon as possible. And we want to make sure that the carbon tax rebate that you already received, if you are in a province that has a carbon tax rebate formula, which would be most provinces with the exception of Quebec and British Columbia, that you don't have to pay taxes on it. So unfortunately, this was promised that you would not have to pay taxes on it, but because the government was basically not functioning for the last 6 to 8 months, it never was passed. So as of right now, CRA is expecting that businesses will file it in as income and therefore pay corporate taxes on it. We're pushing hard for them to get something done before they leave Parliament this spring to make that tax-free. But the indications, we don't know for sure if they're going to do anything right away. I think they will eventually make it tax-free, but unfortunately, you may have to file and then get a reassessment done in order to get the money back later, which to me doesn't make any sense at all. We also see this as applying to WCB rebates in those provinces that have them. Right now, you do have to file that as income and therefore have to pay corporate taxes on it too. We'd like to see another promise that was made to follow through on, increasing the lifetime capital gains exemption to 1.25 million, as well as implement the Canadian Entrepreneurs Incentive, which is basically allowing you, if you sell your business, to be able to access more of the capital gain at a lower rate. So that's something that both of those things were promised by this former Liberal government that we'd like to see them follow through on. And also to help get through, we'd love to see a little bit of a relief on some taxation measures, whether it's a small business tax rate and lowering that from these 9 down to a lower amount, even as low as 0, even if it's temporary, could potentially help. We've also looked at areas around EI and some other areas where there are costs that can sometimes be harder to absorb to just sort of get us through this more challenging time. And finally, internal trade, which I'm going to ask to go to the next slide. This is just an overview of where progress has been made so far on internal trade. The momentum has been very quick, and it's been great to see so many provinces taking this on, including as well as the federal government, to try to eliminate as many barriers as possible. But in the expediency of trying to get this work done, and here you can kind of get a sense of which provinces are doing what and how they're going to do it. I'm not going to go through this in detail, but what we're worrying about now is while there's a lot of activity, there's also a lot of patchwork happening. They're not all exactly on the same page and how they're approaching this, which isn't going to maybe get us any further than we are today. And so our concern is, while we like to see that everybody's really motivated to do something, it's a little bit it's not really as cohesive as it could be. And so we're really going to try hard to work with the provinces to make sure that we have a bit more of a cohesive way of approaching this, so that as a business, you don't have to figure out how this province does it or how this province does it, which really doesn't fix the problem in the first place. All right, so that's where things are at. On to the next slide. I think that's the last slide, which is, of course, the other lingering issue in the horizon is this Canada Post strike. It is another complication in the mix. We had a strike, as you may recall, last November. They did go into they were sort of forced back to work, but to have it a 6-month period in which to try to fix this while they were back at work. We passed that point in May, and now they're on a strike mandate. Now, we're not in a strike as of this point. Right now, the Canada Post unions have said that they will just refuse overtime. That's their way of sort of showing their disapproval. However, Canada Post strikes can have a huge impact on small companies. Advertising, shipping, payments are all things that they rely on Canada Post for. We know from the December strike that about 3/4 said it had a negative impact. That 3 in 10, almost a third, said they had costs associated with it, almost $2,000 per business. And we believe that it really had a huge economic impact as well. Almost 100 billion each day was costing small businesses during the strike. So we don't want to see another strike, so we're pushing hard for them to come to some sort of resolution. But we also know that Canada Post cannot exist in its current form. They are losing so much money, it's ridiculous, that they have to make changes. So a big focus for us is going to be for them to make some major reforms to how Canada Post operates, so they can continue to operate and provide the services that are important to small businesses, but do it in a much more efficient way than they are right now. So with that, I'm going to turn it back over to Simone.
Thank you, Corinne. For this next part of the webinar, let's take a look at the current state of SMEs. And before we go into the data itself, I just want to take a moment here to thank you for the time that you spend filling out CFIB surveys. In the next few slides, you'll see that it's being turned into useful data that we can share with policymakers to give them a really good idea of what is your current situation, what are your main challenges, how is the how is the small business sector doing in Canada. This data is incredibly important and is being followed on markets. For example, as for the business barometer, we actually just sent an invitation to, as we do every month, to 1/6 of you. You should have seen it in your inbox to fill out the next this month's business barometer survey called Your Business Outlook. You're invited to fill it so we can keep track of the main indicators for the small business sector and share that with important stakeholders, so they have a good idea of what are your main pain points, what are your main priorities. So let's go into the first slide in that section. You have here That's the main indicator for what we call our business barometer. So that's a tracking survey, meaning it's a survey we send you to a group on rotation on a rotating basis. 1/6 of you will receive an invitation to fill out the survey on any given month, and we ask a series of questions. But the one we ask right at the start of the survey is, how do you expect your firm to be performing in 12 months compared to now? So it's really related not just to your overall outlook for the economy, but more specifically to how you think your business is going to be doing. And we turned that into an index. It's an index that can be anywhere between 0 and 100. At 50 in the middle, you have equal shares of optimist people and pessimist people among yourselves. So the historical average for the indicator has been about 60 over time, 60 something. But as you can see from this chart, it's been trending down over the very long term since we started doing that in 2000. And recently, it has actually reached its lowest point ever at 25, when we were in the middle of the big announcements with the trade war. The index reached 25, which is a level we haven't even reached during the pandemic. It has since rebounded, and we're now at about 40. But clearly, on net, it means that there are more of you who are pessimistic about the next 12 months than those of you who are optimistic. We would need to increase that way more over the next few months to go back to our historical average of 60 or something. And actually, when you look at the numbers, because you may tell me, oh, Simon, it's probably just the exporters that are feeling like that. But it's true that if we look at the exporters, for example, and if you can just add the exporter data here on the side, you'll see that the index on average in the past 3 months was 26. So yes, it's true, very low for the exporters. But if we look at the importers, we have an index level that is slightly higher, but still low. And it's even true of those that are not active internationally, which is the third category here. Even those businesses that are not directly exposed to the trade war are very pessimistic at the moment. So just an aggregate indicator showing basically that pessimism is unfortunately is still a bit widespread among you yourselves, among the small business owner community. On the next slide, you have the same information for the last available data, which is the data that we've released last month. So your optimism as of May, but by province. And you have not just the 12-month index, but there's also your outlook for the shorter term at 3 months. You see here Quebec and Alberta and PEI entrepreneurs are the top three more optimistic, at least in the 12-month time frame, but still very low levels of confidence. Not a single province above the 50 mark in the index, meaning you have more pessimistic entrepreneurs everywhere. On the next slide, you have by sector, the data by sector for Canada. So you may be able here to compare, depending on which sector your business operates, may be able to compare your own level of optimism at the moment compared to the businesses in your industry. One important point here is the hospitality businesses, which are, you see that it's the only bar for the 3-month outlook where the bar is actually reaching farther than the dot. The dot is the historical average for this sector of businesses. And so that means basically it's the only group and the only indicator for which we are more optimistic than usual based on the historical data. Excuse me. So maybe it's due to a good tourism season, upcoming tourism season. I know that a lot of Canadians have canceled travel plans in the US. Have planned to travel at home instead. Is it lifting some of our hospitality businesses? Is it something else? Perhaps if you're seeing some if you have some observations to share here in the chat or in the Q&A, we could share them. But that's definitely bucking the trend of businesses. Again, if you look at it by sector, it's the same story. On average, being more pessimistic than optimistic, unfortunately. On the next slide. This one is from the same survey, but we're asking you here currently, what is the general business situation of your company? So this is not necessarily about your outlook, it's about how things are doing currently. And here, perhaps the news are a bit more comforting, meaning that, for example, in May, we had 34% of CFIB members who said the situation of the company is good right now, with 48% saying it is satisfactory, so a bit neutral, and 18% saying it's bad. And if you look at the pre-pandemic shares, it's kind of back to where it was at that time. So we're back to more normal shares of businesses in the different categories. The chart at the bottom is simply just a balance of opinion, meaning we've decided to subtract the bad from the good, just the two categories at the opposite ends of the spectrum, and that gives us a net positive 15% of businesses right now that are saying their business is in good shape, which is okay. It's not overly strong, but it's still not a share that is overly concerning at the moment. So perhaps the expectations for the economy are not positive or are not strong, but the current situation seems okay at the moment based on what you're sharing with us. On the next slide now, we were wondering, based on that same kind of reasoning, like what could be impacting the operations of your business at the moment, and specifically since the start of the trade war. So we've asked you last month, have you seen a decrease in your overall business profit? And 42% of you said yes. 40% said the sales of US made products has decreased, and 34% mentioned overall business revenue is declining, with 21% saying the number of customers is declining. And on the other side, you have 16% of businesses that are saying the sales of other internationally made products have increased, and the sales of Canadian or locally made products have increased in 40% of the cases. So again, this is back to this story with the buy local, buy Canadian movement being quite strong at the moment. And in the middle, as you've noticed with the dark gray bars, you have an important share of businesses in each case that aren't seeing any noticeable change. Yes, a lot of things have been put on pause with the trade war, so perhaps that's why you're not seeing noticeable change, and maybe also it is simply due to your exposure to to the US economy or the US-Canada trade, or your business model makes you a bit insulated from those impacts at the moment. On the next slide, I'm taking you back to the Business Barometer survey. And in this survey, each month, again, we're asking you what types of input costs are currently causing difficulties for your business. And last month, we had a bit of a virtual tie between the tax and regulatory costs that were causing difficulties for 68% of you, within a statistical virtual tie. Really, we cannot say statistically that there's a clear winner in second place. There was insurance costs at 67%, with wage costs causing difficulties for 61% of businesses. Here, the bars are always longer than the black dots that you're seeing, meaning we're above historical average again for most of those indicators. You can see here, for example, occupancy cost at 44%. That's almost double the historical average. Product input costs are also much higher, and so on. So this shows that for a lot of you, what you're reporting is a business environment where business costs are higher than usual, probably, or are causing difficulties for a higher share of you than usual, I should say. And that certainly speaks to the fact that and also and one of the previous slide I showed you, like the long-term trend of optimism declining for businesses. It's a challenging business environment, and it's also the kind of message that we're sharing with policymakers all the time, making sure they understand that the challenges. It is not easier necessarily to do business than it was decades ago. It's probably significantly more challenging. On the next slide, we have a similar indicator where we ask you this time not about your cost pressures, but what is limiting growth in your business, whether it's sales growth or production growth. And the top response for last month was for 59% of you, you've indicated that an insufficient demand is limiting your growth. And again, that connects to what we've seen in the first part of this presentation with Canadians perhaps being limited for a certain share of Canadian households and their finances, so perhaps not buying as much or as frequently as they used to. That may impact you, of course, if you're more in the B2B side, and a lot of investment plans and hiring plans are frozen because of the trade uncertainties. That may impact demand for your products and services as well. And we don't have it here on this slide, but if you went to our website at cfib.ca/barometer, you will see that you can click on this top bar or any of the bars in the chart, and you'll see the trend line over time for that data point. And if we clicked on the top bar, if we had the ability to do so, we would see the trend for insufficient demand going up in the past several months and actually reaching a record level. So demand, as reported by you, is significantly weak at the moment. The second most important limiting factor is the shortage of skilled labor for 40% of you. So I think it's an important aspect of business operations that is causing its share of challenges. Actually, if we go to the next slide, I wanted to actually take a closer look at the labor challenges and the labor shortages. I know it's a lot of numbers, but let me just very quickly unpack it for you. It's based on a question we ask you in the same Business Barometer survey. We ask you how many positions have been vacant in your business for at least 3 or 4 months because you couldn't find any suitable candidates. And we aggregate all this and create indicators for the number of job vacancies in the private sector in Canada. And what we obtained for the first quarter of this year is you can see it in the top right corner of this table, is close to 400,000 job vacancies in the private sector in Canada at the beginning of this year. Some provinces like Quebec and Ontario and British Columbia and Alberta being where you find most of the job vacancies. They're also the largest economies and populations, but you can see that even the smaller provinces have thousands of job vacancies. It's also true of sectors. Construction has 47,000 job vacancies, and we're in the middle of a housing crisis. So perhaps here is one area where we can improve things, making sure that those of you who operate in construction services, you have the skills that you need to fill out those positions, and you have other sectors like hospitality, health and education, professional services above 40,000 vacant jobs. So that's very significant. And on the right side, it's a chart looking at job vacancies by business size. And what's interesting here in that chart is, remember what I was showing you earlier in the webinar with this line chart with the job vacancies in Canada overall, showing that it has spiked in 2022, and then since then it has significantly gone down. Many economic commentators saying, oh, they are almost saying like there's no more labor shortages in Canada. Well, actually, if you look at the data by business size, you can see it has gone down significantly. Yes, it's true, but mostly for the businesses that have 100 plus employees. The smaller businesses, those that have between 5 and 19, 1 and 4, they are still reporting a very high number of job vacancies. So one area where we have to keep paying attention, and at CFIB we'll keep putting that at the top of our list of priorities that we want to work on in the next few months and years, making sure you have the labor for your business operations. On the next slide now, let's go into the last part of this webinar before the conclusion. It's the forecast. So we've put together a few different data points that we believe could be useful to you as you're trying to navigate the next few months and quarters. On the next slide, the first one we have, and that's exclusive data that we like to share with you exclusively for you on webinars. This is not publicly released. We released the aggregate for Canada. It's your price plans for the next 12 months. So last month, we've asked you again, as we do it each month, by how much do you plan to raise prices for your goods or services? And on average in Canada, it's 2.9% for the next 12 months. But it varies by both by province, where British Columbia, Newfoundland and Labrador, and Ontario are at the top, where between 3.6, 3.5%, and at the other end of the spectrum, PEI and Saskatchewan are in the 2.4% range. And by sector, that's the chart on the right, you have wholesale, retail, and manufacturing, which plan businesses, which plan increases of between 3.7 and 4.2%, with at the other end, agriculture and finance insurance businesses planning more modest price increases. So that's interesting, this data, because you may also wonder what the Bank of Canada is going to do next with interest rates. Like, are we going to have sustained inflation in the rest of the year? We are seeing right now an inflation that has stabilized, that is within the bank's inflation target, but that is still a bit elevated. And the data that you share here makes us think that price pressures have not completely gone away. So certainly the bank will need to take a close look at the rates for the rest of the year. Most economists believe that there will be a few rate cuts for the rest of this year. The question is not necessarily about whether or not they're happening; it's when in the year. And so it's a bit of a toss-up for the next bank decision, which I believe should happen this week. And so they could decide to cut right away, or to wait until their next meeting, which is happening about every 6 weeks throughout the year. But certainly, probably a few additional rate cuts coming throughout the year. But prices is not the only question we ask you about. If we go to the next slide, we have the same data, but for your wage increases. So perhaps for some of you who are in some kind of planning exercise at the moment, the fresh data is showing us as of May that the average wage increase in Canada is 2.1% for the next 12 months. Prince Edward Island businesses being a bit more ambitious with 3.1%, and Alberta businesses at the other end of the spectrum at only 1.5, and hospitality by sector, hospitality being a bit more ambitious at 3%. So again, like remember when we looked at the optimism by sector, I told you hospitality was a bit of an outlier with businesses there being more optimistic about the next 3 months than even their historical average. Here, does it mean that actually this optimism is translating into hiring intentions? And we've seen also on another slide that there's a lot of job vacancies in hospitality, so you need to perhaps to be a bit more aggressive with wage offers. Is that one of the reasons? That's an open question. Again, maybe some of you will want to share their thoughts in the chat. And at the other end of the spectrum, you have a few sectors where the wage increases are below average, below 2%. On the next slide, I'm just going to very quickly share with you, and then we'll go to the conclusion, some of the forecasts that we have for real GDP and inflation. And just by the way, just to answer that question, are we in a recession now? The answer is no, probably not, because the economy, according to what you have in gray here, is official StatScan data. The economy grew in the last quarter of 2024. It likely grew again for the first quarter. A recession is usually 2 consecutive quarters of negative evolution, so of contraction. So if let's say since it hasn't happened in Q1, we're in the second quarter of the year right now. So a recession could, at the earliest, probably only be confirmed as of the third quarter of this year. It is still very much a possibility, though. You have a lot of forecasters, including ourselves. We actually forecast a strong contraction, but also if you take the average of the private sector, so the big banks, their economics teams, they're planning a contraction in the second quarter and a very, very small growth of 0.3% for the third quarter. So a recession is definitely not out of the picture for this year. For inflation, you have, again, as I was saying, an inflation that is close to the middle of the range for the Bank of Canada at 2%. But if you look at different indicators of inflation, because there's more than one, some measures of inflation remain closer to the 2.5 to 3% range, which is a bit high for the bank's liking. So that's what could slow down the rate cuts a little bit. And then that's it for the forecast. If we go to the next slide, that takes us to the conclusion and the key takeaways. On the next slide, we have recapped a few points here. First of all, for the Canadian economy, I think one of the takeaways is that despite some indicators that show economic growth, as we've seen with the charts, when you strip the effects of inflation and population growth, the real economy per capita has been unfortunately quite stagnant or even negative, and that's why we'll need a better policy environment to stimulate that, and that's probably where Corinne, you want to maybe just remind
Yeah,
members of
so,
thinking.
it is early days, and the proof will be in the actions taken, not just the words spoken, but they seem to be this new government putting a higher priority in strengthening the economy, and working with the provinces on things like internal trade and major infrastructure, which I think is what the economy needs. We'll have to wait and see whether they follow through on those commitments. That is something, of course, that we will continue to push them to do. And while the trade war feels like it has abated somewhat. If you're not directly affected by it, it's still there, it still exists. And of course, the US administration remains, I don't know, seems like they're committed to the uncertainty and creating the uncertainty, not just here in Canada, but globally and within their own country as well. So those are the things that we're facing at the moment. And what does that mean, Simone? Well, low
And
market,
the
right?
Yeah, well, for the business situation, as we've seen, the morale is still low among yourselves, among small business owners. It has been going up though, like the optimism indicator, since we've reached that low point in March, and in subsequent months, it's been going back up slowly, but hopefully surely. Also, many indicators like how your business is doing right now, not just your perspectives, your outlook, are showing that things perhaps are not that bad. But there's challenges in the way, like weak demand and shortage of labor, that remain top growth barriers for you for your business.
So I know we don't have too much time left, but I did want to ask a couple of questions. I think we've answered most of the questions that came up here, but I did want to ask a couple that came up in the pre questions that came in that might be of interest to others as well. I think you touched on this, but um, do you think the Bank of Canada will lower rates at some point this year further?
I think they will. I think there's a very good probability that there will be a few more rate cuts coming from the bank this year. Are we talking about very big cuts and and a lot of cuts? I don't think so, but certainly a few again this year. The whether the question is open is when is it going to start happening at the earliest? And I think that's kind of an open question, but we'll have the answer very soon because the Bank of Canada is meeting very soon, so
Yeah.
they'll sort of send signals on that side with their press release.
And I thought this was an interesting one too. And I don't know if you can answer it, but I'll throw it out there anyways. But for those businesses that are looking to expand, do you think it is safe to still continue with expansion plans at this time?
Well, I think it's again, it's always almost on a case by case basis. I'll be tempted to say, what is your business model? Where is your customer base? There is certainly more uncertainty in the U.S., but our new Prime Minister has indicated that he was keen on making sure that the economy goes into new markets. So, could that benefit your business? Are there opportunities for you there? We've also seen that there is a stronger buy local, buy Canadian sentiment across the country. So could that mean new opportunities for your business, especially if there are fewer trade barriers between provinces? So you may want to expand into another market there. So all that put together may mean that there are opportunities for your business. At the same time, there is still uncertainty, and as we've seen, consumers are still a bit careful themselves. So really, I would say it's down to a business model or business reality. It's on a case by case basis.
Yeah. In every crisis, there's always opportunities as well, right? And it's a matter of sort of finding what those might be for you and your company. So, well, thank you, Simon, for that. If we could just bring the deck back up for just 2 seconds as we come to the sort of final stages of this. Just wanted to remind folks, if you found this content helpful, please think about referring somebody else to CFIB and become a member. And the more members we have, the more power and clout we have with government. And of course, we encourage you, as Simon said earlier, to always fill out our surveys. And the more of those responses we can get, again, the better it can be for all involved. So please refer another business if you know of anyone who thinks you could benefit from not just these types of webinars, but all the other services we provide at CFIB. So, Simon, any final words before we close off?
Again, yeah, just thank you for your time today. Thank you, Corinne, for hosting this webinar. Thanks to the team, and I'm looking forward to perhaps connecting with you again in the fall. We typically do those webinars twice a year, so sometime later this year, check out your inbox, and we'll send out another invitation for another webinar, hopefully giving you an additional round of fresh data that can be useful to your business. But thanks again for your time. Thanks for filling out CFIB surveys, and have a great rest of your week.
Thank you, Simone. Thank you, everybody, for joining us. I know there were a lot of questions in the pre-ones about tariffs. Please give us a call. We do have a lot of good information if you are stuck, and not just on tariffs, on really anything. We're happy to sort of see what we can do to help you through. Thanks again for joining us. And with that, we're going to end the webinar.